Now come to this particular question, and question ID number 49. You have to calculate the depreciation and probably the additional depreciation also in this particular situation. Except new imported machinery, all items are installed during the year. Rate of depreciation plant and machinery is 15%, computer is 40%. X Limited has commenced the operation during the year. Okay, so that is a basic point. Now, new machinery which is installed on May 1. So I will just say plant and machinery, one block. Opening will be nil only because this is a newly started business and all additions have been made during the year. So opening is nil. And we have plant and machinery first of all. So I will add 84. Now it is on May 1. So since the dates have been clearly printed, you directly should click in your mind whether half rate or full rate. Okay. So May 1, that's going to be full rate depreciation because test is 180 number of days. Okay. And May is naturally it's going to cross that limit. Okay. So 84. New windmill purchased and installed on June 18. So that will also be, windmill also be part and parcel of plant and machinery. So that will be added to the block. Items purchased after November 30. After November 30 means it is going to be all items going to be half rate, okay, of depreciation. Now lorries for the transportation of the goods and the sales, okay. So the lorries are also part and parcel of your block, okay. Now as such, for the vehicles, it can also be some separate rate and the separate block. That is a possibility. But in the given question, now we have given plant and machinery rate is 15%. It is clearly printed. So now I am not applying my mind that which rate, because then I have to again go and study the entire schedule to the income tax to find out all the rates and all that. Now question has given only 2% rates. So I'll say that all plant and machinery going in that percentage category, okay. And forklifts which are used inside the factory, so that is 4. But don't forget this after November means half the rate, okay. Now computer is installed inside the office premises. So computer separate rate is given. So technically computer is also plant and machinery only, but because the rate of depreciation is different, it will go in a different block. So, okay, the computer 1, okay, then computer installed inside the factory, so that is 2, okay. And naturally it is after November 30 means half the rate. New imported machinery arrived at Chennai port on March 30 and was installed after 1 week. So it was a new machinery which was acquired during the year, you can say, but it has not been put to use. So since it is not been put to use, I will not make it eligible for the purpose of depreciation, because acquisition and the usage are the two strong conditions for the purpose of getting the depreciation. If you haven't used the asset for the business purpose, you can't get it, okay. So this is going to be your WD. I think no assets have been sold during the year, okay. And just start taking the total. So this is 113 and this is 3, okay. Now except for new imported machinery, all other items are installed. That means all other items are used for the purpose of business and profession, okay. And it has already commenced the operation in the current year. Now you have to calculate the depreciation, okay. Straight away you can start multiplying, start using your calculator, okay. See, percentage you already know. Listen very carefully. Percentage you already know. This is 15% for plant and machinery and computer is 40%. It is clearly printed. You already know that these amounts are going to be eligible for half the rate, okay, and computer, both of them is eligible for half the rate. Is that very much clear? Okay, so your depreciation will be calculated as on the plant and machinery is 7 lakhs, okay, multiplied by 15% multiplied by half the rate. This is how you have to keep on multiplying, okay. That is going to be your depreciation, okay, on plant and machinery. On the balance 84 plus 22, that is 106 multiplied by 15%. That is going to be full rate. This is your depreciation. This is your depreciation, okay. Your computer depreciation is going to be 3 lakhs multiplied by 40% multiplied by half the rate, because of that number of days use, okay. So this is going to be your normal depreciation, okay. Now the additional depreciation. Now the additional depreciation. Now for the additional depreciation, friends, you have to study that which assets are eligible and which assets are not eligible for the purpose of additional depreciation. Okay. So for that, let us first of all go and see. Okay. I told you those conditions now of section 32 2A. Okay. This is 32 2A provisions. New plant and machinery. So only new plant and machinery is allowed other than ships or aircrafts. Okay. Then further, for these ABCD conditions, no deduction shall be allowed. That means no additional depreciation will be allowed. Okay. Now any plant and machinery which are used either within or outside India by any other person. If it is used within or outside India by any other person. In other words, if it is a second-hand assets, I repeat, if it is a second-hand assets, it will not be eligible for the purpose of additional depreciation, because this discussion is only for additional depreciation. Put it differently, only the new assets, new plant and machinery is eligible for the purpose of additional depreciation. Okay, so any assets which are already used, which is not eligible for the purpose of additional depreciation. Second, any plant and machinery installed in any office premises or any residential accommodation of similar nature of guest house. So any assets in office premises or residential premises or a guest house will not be eligible for additional depreciation. Basically, it should be linked with the factory. It should be directly linked with some production, and that's the objective of this particular provision. Now, see, in this particular question, we already have some data like that. See, new machinery, new windmill, lorries, forklift inside the factory, computers installed in the office premises. See, computers which are installed in the office premises, you will not get additional depreciation. Normal depreciation you will get because it is for the business purpose, but that additional you will not get. Now, computers which are installed in the factory, these computers will be eligible for the purpose of additional depreciation. Have you got that? So, your additional depreciation on computer will be, see, 2 lakhs, okay, 20% is the rate. Additional depreciation 20% is, however, for special category state, it is a higher percentage and it is half the rate. Because if the additional is half, if the normal is half because of the number of days, even additional is going to be half. Is that absolutely clear? With respect to the computer, because computer we had only 2 points and both the points have been analyzed. One is eligible, other is not eligible for additional depreciation. Okay. Now, there is one very important point that I want to bring to your notice. Listen very carefully. Very, very important point. Okay. Now, see, with respect to computer, 2 lakhs, 20% additional depreciation and half the rate. This is additional depreciation. Okay. Okay, just multiply how much it comes to. It comes to 0.20. Okay. This is additional depreciation you will get in the current previous year. Listen very carefully. Now, because of the number of days used, you have considered half the rate. That is absolutely correct. But the balance half, 2 into 20% multiplied by half, okay, which you have not given the deduction in the current year, you will get the deduction in the next year. And this is only for the additional depreciation. Mamma mia! Hakuna Matata means no worries. Now see, this is only for additional depreciation. You will get it in the next year. And it is covered by this particular provision. I will show you that particular provision very, very clearly. Okay. See, provided that clause 2A, that means additional depreciation, because of the reason that the asset were used for less than number of days, then it is restricted to 50%. Naturally, it is restricted to 50%. Okay. In that particular case, the deduction for the balance 50%, shall be allowed under that particular clause in the immediately succeeding previous year. Mamma mia. Market is very important. So the balance additional depreciation, you will get it, but you will get it in the next year. Very, very important clause. Okay. But this is only for the additional depreciation and not for the normal depreciation. This is only for the additional depreciation. Okay. So current year additional depreciation of the computer is over. Okay. Next, come to the additional depreciation next. Okay, here. Any office appliances or a road transport vehicles, they are not eligible for the purpose of any additional depreciation. I think in the given question we had that lorries and something like that, transportation of the vehicle and all that. So that we'll have to consider. Okay. Now, any machinery plant, actual cost of which is allowed as a deduction in computing the income. So if there is any plant and machinery for which the entire cost, that is logically 100% deduction, if it is allowed to you, because there are some incentive sections, if it is allowed to you, then additional depreciation on those assets you will not get. That means you cannot get 100 plus 20%. That is not a possibility. They are very, very common sense provisions. Okay. Now see, come back to the question with respect to now plant and machinery. See, new machinery you can get additional depreciation. Okay, one second, let me erase these few things. Okay, so new machinery you can get, new windmill also you can get, because that ships and aircrafts is only not allowed. Okay, now lorries for the transportation, additional depreciation you cannot get. Forklift you can get. Okay, so whatever is the amount of the forklift, you will be, this is inside the factory. Okay, so that you will be eligible for the purpose of additional depreciation. Now computers we have already considered. Then new imported machinery which is arrived at this. So anyway, we have said that this particular asset is not used only, so no question of any such discussion ever coming into picture. So you will get additional depreciation on the forklifts. So how much is the forklift? That was half the rate. Okay, so forklift was 4 multiplied by 20% multiplied by half the rate. Okay, and this 84 and 22, that is full rate. So 84 multiplied by 20% and 22 multiplied by 20%. This is full rate. Okay, this is going to be your total additional depreciation. Okay, then when you are calculating the block of asset and the closing WDV, you have to reduce the depreciation also, and you have to reduce the additional depreciation also. Okay, now see the MCQ. The total depreciation, the total depreciation under clause 2A. Now this is a place where students can really go, nest in the examination condition. Because without doing all this working, you cannot get through only MCQ. This MCQ itself will be like 2 marks. So 2A, this is a additional depreciation. This is a additional depreciation. So MCQ is asking you only the additional depreciation. But I have shown you the entire working for better understanding. So now if the question is directly on additional depreciation, think directly to the additional depreciation and give the answer. That will be the best option. Okay. So additional depreciation, you just take the total, and additional depreciation means you have to take additional depreciation of the computers also and the plant and machinery also, because this is a total additional depreciation, because computer is also plant and machinery. Okay. And take the total, and whatever that figure comes, for that you have to select this particular MCQ.